Hey guys, it's Jamin Kirkwood with Secure Financial Management. I want to get out to you a quick update with everything crazy that's been going on in the markets for about the last week or so. So I like to occasionally send out these videos just to update you on what's happening with the economy, but especially when things like this are going on, it can be very unnerving. I just want to share with you what's causing it and our thoughts around that. So the first thing I want to discuss, and you've probably heard some of these things I'm going to talk about in the news, the first thing I want to discuss is what set off this latest round of volatility that happened in the markets. So you might have heard that President Trump said he's going to put some new tariffs starting in September 1st on China. That didn't help the situation, but it's almost becoming a bit of a daily event, right? Getting a tweet like that kind of moves the markets. What really added fuel to this fire was something that happened at the currency level. Okay, when I'm talking about currency, I'm talking about the Chinese yuan, which is the currency that they use in China. And what happened was that currency got devalued, and the feeling in the market. There's two different thoughts on this, right? But the feeling in the market and what caused such an impact earlier this week was that they felt China was now starting to use currency as a tool in the trade warfare, which is taking it up to another level, right? We've been going back with tariffs back and forth. Hey, we're going to tariff your goods. Well, no, we're going to tariff your goods even more, right? And that's somewhat expected in a trade war. Ratcheting it up to using currency and in fact devaluing your currency, which is what the Chinese are accused of doing, devaluing your currency to make your products cheaper, to kind of get around that tariff that's being put on them, that's a new level. The move was not much. It was fairly minor as far as the devaluation goes, but the concern was that was even something that was starting to be used, and it indicates that this could be getting into a more serious battle on the trade front. So that's what started everything off. The Chinese have since said, no, don't worry, we're going to stabilize our currency now. Kind of, it's one of those wait and see sort of situations, but it's something that we're keeping a close eye on with our portfolios. The next thing that led into that, and you might have heard about this happening as well, it's the yield on the treasuries, the 2-year, 5-year, 10-year, 30-year treasury, sinking significantly, right? And the yield, meaning the interest rate that they'll pay, going down significantly. This is pretty common when there's volatility in the stock market, right? Because what happens is money comes out of the stock market. Where are we going to put it? Let's put it in some treasuries, some longer term stable investments. When there's more money flowing into those treasuries, the interest rate that it yields goes down. There's more demand for the treasury, so they don't have to pay as higher interest rates, so the interest rate goes down. Now keep this in mind, the 10-year is trading right around the 1.75 mark right now as we shoot this video. There are, as of the beginning of the week, there are 12 central banks around the world, 12 countries around the world, where the interest rate that their sovereign debt, their version of the treasuries is paying is negative. Kind of weird, right? So you think of interest rates that you get in a savings account. It's not much right now, right? But you get something. Maybe you get 1/4%. If you're lucky, you're getting 1/2%. In these countries, the interest rate is negative, which is a very unusual situation. It's not something that you see much in the investment world, but what it means is that you put your money into that treasury bill, treasury bond, whatever that country's version is of their sovereign debt, and when you take it back, you get less. It's a negative yielding instrument. And the reason they're doing this is they're trying to promote growth. Like, we don't want you putting money in these treasuries. We don't want you storing your money here. We want you to go out and invest it. We want you to put in the stock market. We want you to be buying things. We're trying to get the economy going. So keep in mind that part of what is causing the treasury yields in this country to go down is that there's money coming. A lot of the European countries have negative yields. Japan has it, Switzerland, Germany, a lot of those relatively big economies. They have negative yields because they're saying, we don't want you to save money. We need economic growth. We need you spending. We need you investing. We don't want you to put it in these treasury bonds. So what do? People still want to put it in treasury bonds, right? They still want it to be stable. So they say, okay, we can't do it in our own country. Let's go and put it in a US treasury. So of course that perpetuates the problem and drives down the yield even more. The reason I focus on this so much is that often when yields sink like that, there is a concern that, okay, this is a real problem, right? The economy is slowing down, so people are taking money out of the stock market, they're putting in treasuries, and that is a harbinger that there's economic problems to come. That's true, it can be that. But also look at the larger picture, where is it also that there's money coming from overseas because their treasuries are negative and they want to put money just somewhere and get some sort of yield, and even if it's 1.7, 1.75%, at least it's not negative. We'll put it in the US. Keep that in mind when these things are going on, is that there's money coming in from around the world because it wants to be here. It wants to be in somewhere that has some sort of growth potential and stability as well. Okay, the last thing I'll say here is that we're up pretty big today, right? That's great. Typically, these events do not play out over a couple of days. Usually large things like this that go on, trade wars, potential issues with currency and inside of that trade war, it usually plays out over several weeks. Okay, so don't be surprised if we have some big moves up and down over the next few weeks as this kind of pushes through the system and everybody gets comfortable with it. All right, guys, as always, none of this stuff that we discuss here should be taken as an investment recommendation. If you want to discuss your personal portfolio, give us a call at the office, 210-428-6250. We'd love to speak with you. Talk to you soon.